where a key measure of Eurozone wages surged by the largest amount since the euro was introduced, complicating the European Central Bank's plans for interest rate cuts as inflation slows. Eurozone negotiated wage growth accelerated to 5.42% in the third quarter, up from 3.54% recorded in the second quarter, and driven by workers seeking compensation for inflation. The data comes less than 4 weeks before the ECB's final policy meeting of the year, where officials are expected to cut the deposit rate for the fourth time. According to new official data, inflation in the United Kingdom surged to a 6-month high in October, exceeding the target set by the Bank of England. The Office for National Statistics, the ONS, reported that higher domestic energy bills pushed consumer price inflation up to 2.3% in October, compared to a 3-year low of 1.7% in the previous month. Persistent inflation in the services sector, which makes up around 80% of the British economy, also contributed to the increase. This unexpected rise in inflation pushed the rate above the Bank of England's target of 2%. Also, figures from the ONS showed that British house prices rose at the fastest pace since February 2023, in the 12 months preceding September. The average house price in the UK in September was 2.9% higher than a year earlier, at $370,000, accelerating from 2.7% annual increase in August. Private sector rents in October were 8.7% higher than a year earlier, the biggest annual increase since May. In Asia, China maintained its benchmark lending rates unchanged as Beijing assesses the effects of existing stimulus measures. The People's Bank of China kept the 1-year loan prime rate, a key reference for corporate loans, remains at 3.1%. Similarly, the 5-year LPR, commonly used as a benchmark for mortgage rates, was held steady at 3.6%. The decision to keep rates unchanged follows last month's unexpected rate cuts, which were intended to boost economic momentum amid signs of slowing growth. Staying in Asia, and according to government data, Japan's exports rose 3.1% in October, driven by strong demand for chip-making equipment in China. This marks a recovery from September's 1.7% decline and surpasses forecasts of a 2.2% increase. However, exports to the United States fell 6.2% due to weak auto shipments, raising concerns over potential trade disruptions from tariffs promised by U.S. President-elect Donald Trump. Imports edged up 0.4%, resulting in a larger-than-expected trade deficit of 461.2 billion yen. Businesses remain cautious amid fears of future protectionist policies. Data showed that South Africa's inflation rate dropped sharply in October to its lowest level since the peak of the COVID pandemic. Statistics South Africa data showed that annual inflation dropped to 2.8% from 3.8% in September. It attributed falling fuel prices as the primary driver of the slowdown, with slowing food inflation as another important factor. South Africa's central bank will announce its next interest rate decision on Thursday. Moving to the tech world now, and the European Central Bank has warned about the potential for a bubble in stocks linked to artificial intelligence, which could collapse abruptly if investor expectations are not met. This caution was part of the ECB's biannual financial stability review, which highlighted various risks, including ongoing conflicts, tariffs, and vulnerabilities within the banking system. The ECB emphasized that the stock market, particularly in the United States, has become overly reliant on a small group of companies believed to be the main beneficiaries of the AI boom.